Good morning or afternoon. My name is Alana Brown. That is Eric Restrepo. And we are here from Neighbors Group and Solo401k.com. Today is our Wednesday webinar series. So we're starting off with a 5-part series all about contributions. Today, we're going to go over employee contributions. Next week, we'll do employer contributions. Then we'll dabble in after-tax contributions, Roth contributions, maybe a little mega backdoor Roth as well. So definitely stay tuned. We'll be doing them every Wednesday starting today. And today is September 29th, almost at the end of September, which is crazy. So I know we're happy here in Arizona. I think, Eric, today is 81 degrees.
Yeah. Oh my gosh. So much nicer now. So nice.
Yeah, we can breathe. So let us know over here. Can you guys hear us? Can you see us?
I have to have the AC on, all night long. So that's nice.
It's a beautiful thing. I can't wait to not turn on the AC at all.
Yes.
It's coming right around the corner.
Love it.
Okay, just waiting on you guys. Let us know in the box. Can you hear us? Can you see us? Anybody? I know you're out there. Oh, thank you, Chuck. Thank you, Jorge. I know there's a little bit of a delay. Thank you, Phil.
There Wonderful. They come.
Okay, well, we will jump in. Oh, thank you, Mary. Welcome, everyone. FJ is ready to learn, and we are ready to teach you.
All right. So like Alana mentioned, we're going to talk all about contributions. And today we're going to delve pretty deep into employee salary deferrals. So there's many different types of contributions you can make to your solo 401k. That's why we're doing this entire webinar series. But today we're going to dive deep into employee salary deferrals. Quick disclaimer, obviously this is not tax advice, this is not legal advice, not investment advice. This is just education, so you guys are equipped so you can make the most out of your solo 401k accounts with us. But again, just consult with your CPA if you do have additional questions about contributions. We're not your tax professional. And just to recap, you guys, obviously, for those that are new to us, about Neighbors Group, we launched our IRA LLC back in 2003 and the Solo 401k back in 2006. We have had consistent IRS document approval for over 15 years, an ongoing relationship with the IRS. Also, what's really cool about us is every single team member here does invest in the Solo 401k, so we know the ins and outs of it on a practical level. Our team works closely with the IRS and the Department of Labor. So really, we have a really skilled team, and it makes it so that you guys have great support. So basically, right, if you're a small business and you're making a profit where you have, either 1099s coming in, or maybe you have a business structure, you have an S Corp or a C Corp or an LLC, as long as you're making that profit, you can make new contributions from your business directly into the Solo 401k. Those contributions can be both pre-tax or Roth, or you can do a combination. And, basically, since you play multiple roles in your plan, so you're both the employee and the employer, you can make contributions multiple different ways, right? And without getting, too complicated, we have a whole webinar series here, but you can basically make 2 different types of contributions. Your employee salary deferrals, that can be up to 100% of your compensation, maxing out at $19,500, and it can be either pre-tax or Roth, or it could be a combination of both, right? If you're over 50, you do get a catch-up. It's another $6,500. And then there's also the employer profit sharing contribution, which can be either 20, to 25% of your net profits, depending on your business structure. And that's always pre-tax. The maximum contributions for 2021 is $58,000. And if you're over 50 or older, you can do $64,500. And again, these are based on your net compensation. So the more that you earn or the more that you pay yourself out of your business, the more that you can contribute into the solo 401k.
Okay, so let's talk about these employee contributions. So the employee salary deferrals, it's the same thing as your employee contributions. They can be up to 100% of your compensation, but it maxes out at $19,500. If you're over 50 years old, you get your catch up of $6,500. So these type of contributions, you get to decide, is it going to be pre-tax? Is it going to be Roth? A mix of both? It's up to you. You know, this is a personal decision. So as you can see, this visual kind of shows you your employer contributions, the kind that we're not talking about today. That's only going to be pre-tax. It's only going to be traditional contributions. Your employee contributions, those can be either. You know, if you're making your employee contributions as traditional, you get a tax deduction. If you're making it as Roth, you're not getting that tax deduction. But the great thing about Roth, it grows completely tax-free. So upon distributions, you're not paying any taxes. So if you are going to utilize Roth, make sure that you're designating some of those employee contributions to that Roth bucket. So another really important item to discuss here, your employee contributions, is across all of your plans where you are an employee. So if you have a day job, you know, a regular job in addition to your small business, which I know a lot of you do, you may not be able to max out on both. So remember, the total combined for all of your employee contributions is going to be $19,500. And of course, if you're over 50, it jumps up to $26,000. So let's take an example. Jennifer works full-time at an architecture firm. She also has a consulting business on the side, which is structured as an LLC. Jennifer contributes $9,000 to her 401k at the architecture firm. How much can she contribute to her solo 401k? So her net earned income for the LLC for her consulting business is $25,000. This means that she should be able to contribute $19,500 on the employee side of the solo 401k. But remember, she's already contributed $9,000 to her full-time job's 401k. So she can't do the full amount. So how she calculates it, she takes the $19,500 minus the $9,000 because she's already making an employee contribution. So what's left over is $10,500, which she can contribute on the employee side of her solo 401k. Jennifer is still very pleased with this because she gets to put some additional contributions in. Also, what else is great is the $10,500 that can go into cryptocurrency. Her current 401k at the architecture firm is stuck to, mutual funds. She can't choose what she can do. It's stuck to anything that's in the stock market. So with our plan, it has that flexibility. So she's very happy that she can get some funds into some alternative investments. So a great tool is our contribution calculator. So if you see here, we put in Jennifer's information. And what's also great about this is take a look. You can compare, the solo 401k, that's the individual 401k. And you can compare the different contribution limits to like the SEP IRA, the simple IRA, profit sharing. It's a huge difference. So the solo 401 has much higher contribution limits. So now we're looking at Jennifer's breakdown. So you can see, if she didn't have her initial job, her full-time W-2 job, this is what the breakdown would look like. But since she does, not a problem. She'll just want to take, the elective deferral amount that you would have been allowed to make in the solo 401k, minus it from what she's currently making at her full-time job. So that's $9,000, and that's how you get that $10,500. On top of it, and we'll cover this next week, as an employer, she can make contributions. So definitely check out that calculator if you haven't. It's a great starting point to nail down those contributions. As you can see, this is on the IRS website. We are not making it up. It says right down there in that red box that a business owner who is also employed by a second company, that if they're already making employee contributions, it's across all plans. So there it is. There's your proof. It's not our rule. It is an IRS rule.
Perfect. So you might be thinking, what's my deadline for contributions, right? What if I file an extension? So according to IRS Publication 560, which we'll show you in just a second here, really the due date for contributions is when you do file that employer return. So that does include an extension. So if you're an S Corp or an LLC or a partnership, that would be March 15th. If you file that extension, it'd be all the way until September 15th. And if you're a sole proprietor, it would be April 15th. Or if you file an extension, all the way till October 15th. It's generally recommended that you do elect those contributions by December 31st. And we'll show you there's a form that you fill out in your back office when you do elect those contributions. Generally speaking, you do want to elect them, but you don't actually have to make the contribution into your solo 401k until you file taxes. And just like this is shown again on the IRS website, IRS Publication 560, basically, you do need to elect those by the time you pay taxes. So good question a lot of people ask is, is it too late to contribute as an employee? If you are a C Corp or a sole proprietor, you actually can still make contributions for 2020, believe it or not. You have, as long as you filed an extension for your business. So if you already filed your taxes April 15th, too late. But if you filed that extension, you could still make new contributions, and those could count for a year, tax year 2020. Also, we've done a lot of great webinars in the past on contributions. This one right here with John Heyer as a special guest. He's a tax attorney, so he delves deep into contributions. If you go into our network, and maybe we could post that link as well, just search contributions on past events, go into the events tab, and maybe if we have time at the end, we can show you where that is. But lots of great additional, if you need more answers about contributions, that's a great webinar to go check out. Let's jump into a couple of frequently asked questions about contributions. So one question that gets asked a lot is, how do I send Neighbors Group my contribution funds? What are the wire instructions? Where do I send my contributions, right? Well, just remember that Neighbors Group is not your custodian, right? So this is not a custodial plan. It's a fully checkbook control plan. You do have to have somewhere to park your funds in your solo 401k, right? So you do typically have either a bank account or a brokerage account, or maybe both. So once you set up those accounts, you can send your contributions directly there, right? Obviously, your business has to be making some profits. Once that business makes profits, you can go ahead and contribute those funds directly into that solo 401k bank account or into that solo 401k brokerage account. Either way, you don't send the funds directly to us. We're not your custodian. Also, another question which I saw actually looks like somebody had asked in the chat, how do I document my contributions, right? We actually have a really handy form for you to do that. So in your dashboard, when you log in, click on the top tab there where it says Forms. Scroll down, there's a form that says Contribution Form. Just go ahead and click on that. You can open it up, print it out, go ahead and pick, wherever you contributed, whether it was Roth, a pre-tax, profit sharing, voluntary, after tax. Obviously, we're going to go into all of those different contribution types through this whole webinar series. But yeah, you want to go ahead and just, since you are the plan administrator, just fill that out, right? It's a good idea to formally elect those, like we talked about, by the end of the tax year. So 12/31 would be great to have that done. That way you can go ahead and sign it, put it into you can store it back into your dashboard if you want. You don't need to send it into us. since you are the plan administrator, you just want to keep it for your own records. Also, another question, where do I show the contributions on my tax return, right? We do have a handy blog article. Also, maybe we can link that in the chat there as well. But go ahead and just, follow this guide. It talks a lot about it. Obviously, work with your CPA as well. They'll know exactly what to do. Different contributions go in different boxes. It is important to, make sure that if you're doing pre-tax, obviously you do want to get that tax deduction, right? If it's Roth, then obviously there's not going to be a tax deduction. But like Alana said, if you do that correctly, you'll never pay taxes on those funds again.
Okay, so I know we covered this question. If I contribute to my regular full-time W-2 job, can I still contribute to the solo 401k? If so, how much? So the answer is yes. And we do get that question often. So definitely want to reiterate that you absolutely can. And just what's most important is make sure you're just calculating it correctly. Use our tools, use our educational materials. It's pretty simple to figure out what your employee contributions should be, and always work with your CPA. So where does the money go? How do I actually contribute the funds? Eric did touch upon this. This being fully self-directed, you're choosing, is it a bank account? Is it a brokerage account? So you're simply just wiring the funds, your contributions from your business earnings to your bank account, your trust checking account, or maybe your brokerage account. From here is where you're doing all of your investing. So then you remember, so you're the one that's in charge. Some people want both a bank account and a brokerage. The bank account's great for alternative investments. The brokerage account is necessary if you want to do stocks, bonds, ETFs, mutual funds. Some people want both. Some people want one or the other. This is your plan. You also don't have to make the decision right away. Maybe in like a year or so, you want to open up a brokerage account. You can absolutely do it then. You can have as many accounts as you want. You could have 5 bank accounts, 3 brokerage accounts. It doesn't matter. You open up as many accounts as you need for your plan. So we do love a good visual. Your business earnings goes into your bank account. From there, you're going to move it out to any of your investments. Maybe it's a private note. Maybe it's your crypto exchange in the name of your trust. So fairly simple. Like always, we have great support and services for you guys. Our clients have access to free trainings, unlimited support. You can email, chat on our website, join us on Mondays for our live Q&As, participate in our Wednesday webinars. Also check out our network. If you're not on our network, you are absolutely missing out. You'll find this event will be recorded there, and all our other events are there as well. You can also post lots of great questions. Just connect with like-minded investors. Then, of course, our website, solo401k.com. It's a great spot. Also, if you can't remember these other resources, you'll see links to our network there and to our knowledge base. And our website is like a library for the Solo 401k. And then, of course, our knowledge base, support.solo401k.com. Maybe you want to open up a Kraken account and you're like, I have no idea how to do this. That's where you'll find a step-by-step guide. It'll teach you how to open up your Kraken account. Maybe you need information on brokerages or our bank accounts. This is a great place to find step-by-step guides on so many different things. And if you are not a client of ours and you want to chat with either Eric or I, go to solo401k.com/consults. You could always email us, support@solo401k.com. You could always call us. We are very easy to get a hold of. So utilize our supports. Okay, let's jump in, see what kind of questions we have. Perfect. We have questions. We love that.
Yep.
Okay. So the first one is coming from Craig. My 2020 tax filing deadline is coming up on October 18th. So far, I've contributed $12,000 to my solo 401k. I think that all of that is an employee based upon 1099 income. How can I use the mega backdoor or after-tax contributions to get the maximum in there before October 15th? Then after I finish that, how can I get the maximum in for year 2021? and then in January 2022. Can I also put in the maximum for 2022? So a lot going on here. Craig also has some additional facts here. He's 62. He's using the Roth bucket only, no other 401ks, currently a sole proprietor. So Eric's going to break this down a little. And remember, we're not your CPA. We're just going to give some like broad guidance here. You always want to double check with your CPA because we are not your tax professionals. So take it away, Eric.
Yeah, absolutely. Great questions, Craig. Yeah. So obviously, like we covered here, your contributions are based on your business earnings, right? So that's one key factor is you can't just put any money into the solo 401k, right? You have to have actually earned it in that particular business. So that for you as your sole proprietor, as long as you've made the money in your business as a sole proprietor, you can contribute that to the solo 401k up to the limits, right? So yeah, follow the guidance that we've given. So so for the employee side, Craig, you would max out, since you're 62, you would max out that at 26,000. So again, as long as you made that money in your business, you can contribute it. Also, you can do that employer profit sharing if you want to. That would be up to 20% of your net business earnings. And again, yeah, definitely work with your tax professional on that. But it looks like you're mainly focused on the backdoor, mega backdoor contributions, which is great. Our plan does allow for after-tax contributions, which can then be converted over to Roth. That, again, same thing, as long as you've earned that money after paying taxes, right? So, take your net net income after tax. If that totals the maximum, which for you would be 64,500, you could technically do that full 64,500 as an after-tax contribution. Now it looks like you've already contributed 12,000, so keep in mind, subtract whatever you've already contributed, right? You don't want to over contribute. So, but as long as you're keeping track, so say you did that 12,000, now you still have another, if I do quick math, like 52,500, right? That could all be backdoor Roth contributions, for 2020. For 2021, it's going to be based on your 2021 earnings, right? So the year's not over. So just be a little bit careful there, right? You want to make sure that, again, that you've actually made the money in the business to be able to contribute it. So generally, it's best to do it toward the end of the year for that purpose. And remember, for 2021 contributions, you don't have to make those for you until at least April 15th of 2022. Okay. You elect them by the end of the year, but you don't actually have to contribute those funds until April 15th. And then as far as 2022, yeah, we haven't even touched that yet. So if you're making money in 2022 already, that's awesome. Cause I don't know, you must be traveling to the future or something. So, but yeah, just keep in mind, you have to actually make the money in your business to be able to contribute it. It can't just be any money, any like money that you make in like another W-2 job. You'll want to do like, an IRA or something like that. So, hopefully that makes sense, Craig. If you need any clarification, send us a comment here. Or yeah, also obviously work with your CPA for sure.
Perfect. Great question. A lot going on. Thank you, Eric. And then Craig, you see I posted a few articles for you over there and for everyone. Those are some good ones.
Another question from American Made. Do we need a certain form when making contributions?
Yeah, if you take a look, we did show you in the presentation, we have contribution forms you can utilize. So use that. Another recommendation is you might want to have a spreadsheet. So for me personally, I use our contribution forms and then I have a spreadsheet and I have one for each year. So I keep track of my traditional contributions, my Roth contributions, which ones were employee, which ones were employer. So that's another great option as well. So, using the contribution forms we provide for you, as well as a spreadsheet, that should suffice. So And another, you added, is that needed for tax time? So, well, yeah, it's good for you. So when you talk to your CPA, so that's when, you have recorded what you made your contributions. Now, let's say you did, $20,000 in pre-tax contributions. That's when you're going to tell your CPA, because they want to record that on your taxes, because you're getting that reduction in your taxable income. So those actual forms are not what's going to be sent to the IRS, but these forms you may want to send to your CPA so they report it properly on your taxes. So great question. The next question comes from Sam. Is the bank account a personal account?
Yeah, no. So Sam, great question. The bank account that we're referring to that we discussed is the solo 401k bank account. So it is just like a checking account, right? But it's different. It's not under your personal name. It's under your solo 401k name. So when you sign up with us, you get to choose a name for your trust, because the trust is basically the vehicle that does all the transactions with your plan. Okay. And that trust is what's on title to that bank account. So it is just like a checking account. It just has a different title. It's not you personally, because you're the trustee of your solo 401k trust. You do have, signatory powers over that account, right? You can send money out as a wire. You can write checks out of there, go into investments. But yes, it's a bank account that's the name of your trust. And I think, and you want to send money from, most likely from your business over there, like a business account. You just want to make sure that you've actually made the money in your business. So it's best to have it come from the business account, but it could potentially come from personal account when you're making those contributions, right? It just needs to make sure that you actually made that money in your business.
And then if you're a sole proprietor, it may be coming from your personal account, your contributions. Yeah. It all really just depends on your business structure. But yep. I think Eric explains it pretty great. It's not a personal account when it's your solo 401k. It's your trust checking account. And then, so also Sam wants some recommended banks. Yeah, of course we do. I'll pull them right now.
Yeah, we have Solera Bank. I think actually somebody answered in the comments, Solera Bank in Colorado. And then we also have Titan Bank in Texas, both great banks. You can use any bank that you want to though, Sam. So any local bank, if you prefer to go walk into that branch, great. They should be able to open up that account for you. There's a lot of really good guides on our knowledge base that kind of walk you through step by step what to tell them. Obviously with our banks, we've trained them. So, there's not going to be any questions at all whatsoever. They're going to just say, this is what you need. Boom, boom, boom. Get the account opened. So if you do want the easy button, definitely use our banks. But it is possible to get it set up with any bank. I actually talked to somebody the other day that set theirs up at Capital One. So, big banks also work as well.
Perfect.
Another question comes from Jim Woods. The funds come from business profits and not from a salary, W-2 as the business owner. Therefore, no other taxes to incur, SS tax, Medicare tax, etc.
So, contributions, it's not solely from profits. It's from your net compensation. So it all really depends on your business structure. If you're an S Corp or a C Corp, you're being paid W-2 wages. So you're going to base your contributions on that. And your taxes are already being taken out of that. So you'll look at your W-2 income, and then you'll do the calculations based on that W-2. If you're a sole proprietorship or a single member LLC, you're going to look at your Schedule C, your net earned income. So that's after deductions. And then if you're a partnership and you're doing a K-1, that's line 14, because that's the self-employment line. Anything to add there, Eric?
No, I think that's perfect. Yeah, great answer. It is a little bit of especially if you're incorporated, if you do have that S Corp or that C Corp, it is a little bit of a dance of, how much should I pay myself in W-2 wages versus how much should I pay myself in distributions. But with those S corporations or even an LLC that elects to be taxed like an S corporation, you have to pay yourself those W-2 wages in order to contribute funds into the solo. So yeah, you just want to work with your tax professional to figure out what's going to be the best balance for you. But yes, that's how you make contributions for an S corp or a C corp.
Perfect. Great question, Jim. So for the next question from Rami, can I have one Coinbase account and add both my wife and my Solera accounts, traditional and Roth accounts, to invest in crypto? Or my wife has to have her own Coinbase account and log in to invest?
Yeah, so I don't have a trust account with Coinbase, but I know that when you sign up with Coinbase, obviously it is not a personal Coinbase account. This is Coinbase Prime. So you want to use follow our guide to open that account. As far as having two accounts, I believe that they are separate logins. Do you know about that, Alana?
Yeah, they will.
Mm-hmm.
And so you'll need a new email. That's the thing, sorry to jump in, Eric.
Yeah, no, you're good. You're good. Yeah.
So all you lovely people out there that your spouse is participating on your plan, just like how you want separate bank accounts, you do need separate crypto exchanges. So you'll need to create a new email. Some people actually like to use a whole other exchange. Like they'll have their spouses on Kraken and they'll be on Gemini or Coinbase, whatever it is. So what's most important is you're keeping your spouse's funds separate from each other. Also separate tax classifications. So if you're using traditional funds and Roth funds, you might have 4 exchanges. So keeping all that stuff separate is very important, Rami.
Yeah, it's an emerging industry, so like they don't have like sub accounts, right? There's not like a way to have just one login, unfortunately, with 4 different accounts all in it. Some of the banks you can do that. You can have one login, have like a Roth sub account. You can just nickname those accounts, and even some of the brokerages allow that too, or they have that ability to have sub accounts. But with the crypto exchanges, they're still just getting kind of set up, and solo 401k and 401k accounts are just probably not their absolute top priority to make it optimized for. So, but yeah, great question. So another question from Tom. I have been depositing Roth contributions to Solera and then moving them to TD. Are you saying I can go straight to TD if it is not necessary to go through Solera?
Yeah, Tom, great question. So yeah, absolutely. You can go right to TD. Some people like to do all their contributions to their bank account and then move it out just so it keeps good detailed records. But that's only some people. You could absolutely do it right to TD. Skip one step. You do not have to go from bank account to TD. Just keep, have your spreadsheet, keep track. You can write, employee contribution was made to, TD Ameritrade on whatever date. So just knowing where exactly you put those contributions. So the answer is you can go directly to TD with your contribution. So great question, Tom. The next question comes from Kazuki. How does pre-tax contributions relate to QBI deduction?
That's a little bit beyond my scope.
I know. I'm actually on the IRS website right now trying to look at what QBI is.
Qualified business income deduction. Yeah.
I just feel like it doesn't apply. I mean, I've only been looking at this for 1 minute, so it's kind of hard. But you know what I'm going to do? I am going to, for you, Kazuki, let me put this into the chat and you can read into it. I'm not sure it applies to the solo 401k. Check it out. If you read it and you have additional questions, shoot us an email or chat on our website or go to our network and we'll be happy to address any questions there.
Another question looks like, Rami said, I didn't know I have to have Coinbase Prime. I'm using my personal Coinbase account to invest my 401k. Uh-oh.
Yeah. Rami, you got to talk to your CPA because you're using your personal account. Could be some consequences there. So you want to get that corrected as soon as possible. So it may have to count as a distribution. So definitely talk to your CPA today. All right. And that's for everyone. Remember, guys, when you're opening up accounts for your solo 401k, everything's always in your trust name. Sometimes when you're opening up your brokerage account, it might be in your plan name too. It depends. Each brokerage is different. So, and what's most important, if you ever are filling out an application, you're opening up account, something doesn't seem right, lean on us for support. That is what we're here for. You could email, call us, chat on our website. We want you to do this correctly. Okay. We'll give everyone a few minutes. Let's take them around our network and all that good stuff. Here's our knowledge base. So Rami, this one is for you. Type in Coinbase, and this is how you open your Coinbase Prime exchange. We really try to make these articles as simple as possible to make it easy on you guys. So Rami, check this out. Start getting your account open. Also, just so you know, it might take a little long for Coinbase. If you're in a rush, check out Kraken, check out Gemini. They're getting these accounts open within a week. So everyone else that's on this call, use this knowledge base. It's a great place to get articles and to get you through any, questions that you have. Maybe we're not around, it's midnight and you've decided that's the time you want to work on your solo 401k. All of this is here for you. So check it out.
And Rami's asking about is there a Robinhood Prime as well? I don't think there's there's no, Robinhood doesn't support retirement accounts at the moment, as far as I know. So yeah, that's just like personal funds that you could invest over in Robinhood. Personally, I took my stuff off Robinhood a while ago just because of that whole debacle, but that's all, your personal choice there as well. I have my stuff at Gemini, really like Gemini. I've heard good things about Kraken as well. Coinbase obviously is the biggest one out there. So I've heard they can take longer, just depends. Some people are saying a couple days, week. Other people say it took them like a month.
Okay. And we have some more questions here. Oh, Tom asked about Robinhood. Great. Okay, then Tom. So deductible contributions can be under either employee or employer. Is there any benefit doing one before the other, all things being equal?
Yeah, no, it's kind of like use it or don't, right? These are all just kind of like options, right? So whether you use the employer contribution, you use the employee contribution, or you use both, either one, there's really no preferential. I would say, maybe strategically, like the employee, because the employee is, that can be up to 100% of your net compensation, whether you're, an S corp that pays yourself W-2, or you're an LLC or a sole proprietorship that does like 1099s. That's typically the first one that people elect because, say you only make like $30,000, for the profit sharing contribution, 20% of that's not very much, right? So you can still do the 19,500. If you're 50 or older, you can also do that 6,500 additional as a catch up, and that can be up to 100% of your net compensation. So probably strategically the employee and then the employer.
Perfect. Okay. And then in Bitcoin Pro Storage, what choices of coins or tokens are available? Yeah, let me pull those up. And just so you guys know, we do have a platform. We have a broker that we can do your Bitcoin purchases for you. It's fully insured, which is great. And it's on a cold wallet, so it's never, live on the internet. We do all the work for you. We'll get your account set up in 2 to 3 days, 3 days at the most. You'll just wire the funds to your account, and then that'll settle between 1 and 2 days. So you'll be doing your trade within that week. So anyone that's in a time crunch, this is a great starting point for you. I'm going to post all the offerings in the chat here, Craig. I'll also post if anyone is interested in checking out our Bitcoin Pro Storage. It really is a great program, especially for people that don't want to deal with it and they want it insured. There is a monthly fee, just so you know, but that monthly fee provides that insurance. You're not getting that insurance on Kraken, Coinbase. Someone hacks in and steals your stuff, it's gone. So that's why I love the Bitcoin Pro Storage.
Yeah.
It helps me sleep at night.
Yeah, and I have some there too. I do have some on Gemini as well, but I have some in a Roth IRA through our partner there as well. So it is nice to know that you have that insurance there to back it up for sure, and that it's not connected to the internet. So you're never gonna have a hack take your Bitcoin, right? Yeah. So
helps me sleep at night.
Yeah,
that should be the tagline: Bitcoin Pro Storage. It helps you sleep at night. So perfect.
Yeah, and the way that I look at it, especially with Bitcoin, it's like, if you buy gold and silver, you're going to pay custodial fees to hold that. You're going to pay for insurance. You're going to pay for those, armed guards to house that into like a secure facility, right? So really, Bitcoin especially is like digital gold. So paying a couple of, small fees monthly to maintain it, to me, over the long haul where we expect the price to go is definitely worth it. So.
Absolutely. Yep. Great point. Okay. Well, I think that's all the questions. This was great. I love our Wednesday webinar series. So next week we'll concentrate on employer contributions. So definitely join us next time. And yeah, have a great day. Thanks for participating.
Thanks, guys. Take care.